Hello and welcome to today's edition of the Deep Dive. It's May the 8th, it's a Monday, and if you have the bangles on today, rocking to another manic Monday, good for you. If it's not a manic Monday and it's peaceful, after all, for all of you on the West Coast, it's quite early, maybe not quite as manic yet. Welcome, it's wonderful to have you here. Don't hesitate to put in the chat box where you're from and maybe how you're feeling this morning. We're all trying to figure out how May is coming along. The nice thing is today we are going to focus on a topic that I know is important to all of us and something we're generally curious about. And that is, where are home prices headed this spring? So we'll be looking at several metrics on this and try to get a sense of how the markets are faring through the price lens. So with that, as you might know, I am George Ratiu, Chief Economist for Keeping Current Matters, and I look forward to chatting with you. So as folks are signing in, we're going to take another minute here to get everybody squared away. And if you just joined, welcome to this edition of the Deep Dive. Let us know where you're coming from, how you're feeling this morning. And also to keep in mind, at the end of my remarks, I'll welcome any questions you have about the slides, about the market. So just drop them in the chat box and we'll be glad to take a stab at answering them. Our focus for today is really, where are home prices headed this spring, right? In many ways, whenever you look at pricing information, there's a slight lag, right? So we know that even when we look at prices today, generally what we see, the most recent might be inventory prices. You are aware in your market what prices are, but as far as sort of nationally, generally they tend to be lagged a little bit, but they give us a nice idea about where the momentum is going. So with that, given that we are at time, let's delve into this particular topic. And in order to look at where prices are headed this spring, I really wanted us to take a very brief journey back in time and really, in a sense, ask you to maybe remember fall of 2022, right? September, October time, and the predictions that we saw at the time in the press. And you might remember this was right after we saw, number one, peak pricing in June of last year, followed by mortgage rates crossing over the 5% threshold and moving into October and November past the 7% mark. And at the time, a lot of analysts, a lot of headlines were calling for prices to see a massive decline. And you see here on the screen quotes from CBS News, from Fortune, calling for really dire predictions about the price trajectory. So with that in mind, now we can begin to move forward. And what's worth noting, we've been tracking several price indices, and we look at those that compare sales of the same home over time, right? That way we're trying to compare apples to apples when it comes to pricing. So Case-Shiller, the Case-Shiller index does that. CoreLogic also has a repeat sales transaction price index that they track every month. And what I show here is Soma Head, their chief economist at CoreLogic, is basically saying that while housing markets continue to show mixed signals into the spring, prices in many large metros appear to have turned the corner. Importantly, she points out that CoreLogic saw a second consecutive month of positive monthly gains, 1.6% month-over-month increase, and it was significant. She put it in the context of the 2015-2020 period. She said it was twice the average we saw during that period. Importantly, and here's the graphical view, right? When you look at this graph, you actually see what happened on a monthly basis as we move from one month to the other. You see that the post-June peak, we had July, August, September, when month to month prices really saw a softening, they retreated. And then February, they really rebounded. March, they continued building momentum on the upside. That to me, when I look at that, is significant because it really speaks to the fact that markets haven't behaved according to the expectations from the fall, and that's really a positive bit of news. And I'll also point out that these are month-to-month movements. If we're looking year over year, prices are still in positive territory. They haven't really dropped. The core logic price index hasn't dropped yet year over year. It slowed the growth of that price gain, but it hasn't dropped. Importantly, Selma also points out this. The monthly rebound in home prices underscores as something you know firsthand, the lack of inventory in the current housing cycle. And so while affordability remains a real challenge for many buyers, the remote work reality has really improved mobility for a lot of people, and it's really helping maintain demand in a lot of markets across the country. Importantly, I think this year will show more geographic divergence, so certain metros will do better than others, but by and large, we're not seeing the same type of behavior we saw in the markets in prior cycles. So what I take away right off the bat, and I want you to take with you into this week, we're seeing pricing momentum picking up as we move through spring. And that's quite a departure from the expectations of the last 8 months. And I know you look at the news the same way I do, and you've seen the calls for a massive market correction, huge drops, and they have not shown up yet. And in fact, given the fact that buyers are still out there, demand is underscoring the price trends. And to really make that point, we looked at 3 separate indices. So we pulled up the FHFA, so Federal Housing Finance Authority, which oversees Fannie and Freddie. They track housing markets across the country, and you can tell January, February, that's the latest data point, the FHFA price index showed a similar rebound after the winter lull. The Case-Shiller index, which is lagged by about 3 months, so we have February data, also showed a rebound in February. And of course, you have the core logic, which shows both February and March solid rebounds. So in essence, if we're asking where are home prices headed this spring, the short answer is from a monthly standpoint, we are seeing prices head back up. To me, that is an indication, number one, that there is continuing demand in the market. And I think this is something that homeowners, particularly those who pulled back during the fall and winter, have been really worried about, right? They're worried about prices falling. They're not going to get what their neighbors got last spring or summer. And then they were worried that due to mortgage rates and prices, that buyers were going to dry up as well. And it turns out buyers have been steady through the winter. Yes, it's not the same market we saw last year, but buyers have not pulled back in a significant way. So what I showed here is a quote from Craig Lazara, who's the managing director for S&P, Standard & Poor's. And what he's saying is moderation we observe nationally, and he's referring to the winter period, is more apparent at the granular level. Importantly, he says, prior to adjusting for the winter season, prices rose in 12 cities out of the 20 that Case-Shiller tracks in February, compared to only 1 in January. That's a significant increase. And even after they apply the seasonal adjustment, meaning we're going to account for winter being slower and spring picking up, what he's saying is that prices showed 9 cities with positive growth versus 5 in January. So his bottom line point is, with or without seasonal adjustment, most cities' February results showed improvement relative to January. And that's saying something. I mean, and I've been following Craig's remarks for really the last few years. This is really something that even S&P is paying attention and observing. And to look more specifically, here's the list of the 20 cities. This is seasonally adjusted. So this is, to his point, after the seasonal adjustment factor was applied. And what you see here is a clear geographic delineation, right? You see a lot of cities like Atlanta, Boston, Charlotte, Chicago, Cleveland, Denver, Los Angeles, where prices month to month are rising. The ones that are seeing some price declines tend to be like, Las Vegas, Dallas, Seattle, San Francisco. So markets that have been impacted, A, by really high price growth over the last 3 years, and B, and I think importantly, in a lot of these markets, we're seeing the impact from the tech sectors, particularly the layoffs that we've watched over the last 12 months or so. But by and large, we're seeing in February 9 cities with positive price growth. And moving forward, I think this is the big question for the rest of the year. What can we expect? And when I look at what a lot of economists and researchers are expecting, something interesting stands out. Here we have Doug Duncan, chief economist for Fannie Mae, saying that the greater than expected resilience in the housing sector, I'll stop there to point out the greater than expected resilience, right? This is a sector that was supposed to crash and burn, just 6 months ago based on expectations. And yet here we have a chief economist of the respected Fannie Mae saying, housing market's actually doing a lot better than we expected. So a lot of this resilience, right, is even with affordability, with mortgage rates, is central to Fannie Mae's expectation that the recession, they still expect the recession later in the year, will be modest. And to highlight that, here's what Fannie Mae forecasted in March, their expectations of prices in 2023. And here's the change in April, just 1 month later, because of the way the market has shifted. Fannie Mae expects prices, at least right now for the year, to drop only 1.2% from 1 month earlier when they thought prices would drop 4.2%. So going forward, I expect to see possibly even more revisions to people's forecasts, given how the market is performing so far. And to I think really highlight what's going on in the market, here's Danielle Hill, chief economist for Realtor.com, saying real estate, and you know this more than anyone else, has always been local. But as the buyers and sellers adjust to higher mortgage rates, lower affordability, regional trends are diverging much more sharply this year than we've seen over the last really 10 years, and especially the last 3 years. So I think the key takeaway for a lot of, and she spoke about this in the press towards consumer, this makes it more important than ever for buyers and sellers to tap into timely local real estate data and conditions when making their housing decisions. And I think this key is why it's so important for you as trusted counselors, trusted guides to both buyers and sellers this spring season, to bring this information in your discussions, to highlight that the expectations a lot of buyers and sellers have been reading about in the press have not yet matched the data. The data actually points to a market that's a lot more resilient. So what do all of these numbers mean on this Monday morning, right? Here we are, beginning of a new week. As far as I'm concerned, and here's my big takeaway, in the wake of 8 months of worrying about an impending recession, an impending massive correction, and possibly a frozen market, I've heard that language before, my key takeaway that the 2023 spring real estate market is open for business. Yes, it's not the same market we saw last year or 2 years ago, but at the same time, it's quite evident from a number of metrics. Buyers are still in the market and interested in purchasing a home. The one thing they're trying to juggle naturally is their family finances, the current prices, as well as mortgage rates. And so in a sense, they're looking at all the math, trying to figure out how can I afford the home? And that's really such a different question than can I afford a home? I think for a lot of them, the reality of life changes, family formations, having children are obviously playing a much bigger role. So they're trying to figure out how to make their next move happen. So ultimately, how can you prepare for the market shift this spring? And there are a couple of things. First off, I think it's worth remembering that we've watched headlines for 8 months trying to prepare us for a different reality, one that's much more pessimistic. And I'm not discounting the fact that the recession might still happen later the year. But for now, the underlying data is telling us the market's active. Buyers are there. In fact, a lot of sellers, I think, may come to accept the fact that prices are not nearly as low as they were. And even if they list this spring, they might not be far off the pace of their neighbors from a year ago. Speaking of personal experience, in my own neighborhood, a house just went on the market this last week for a premium compared to a similar house that went just 6 months ago on the market, and it sold in 2 days. And so I think we're seeing a lot of this, and I'm sure you can attest to that in various markets where you are practicing. So I want us to take that away. More practically, at the same time, I want you to also keep an eye out. We're going to release the latest monthly market report. David Childers is going to delve into the latest numbers and information on how the markets are faring with a lot more in-depth information. So keep an eye on that this week coming up. And also importantly, as you prepare for this market, you can take some interesting tidbits of information out of the replay of a webinar, which is available for free, How to Grow Your Business in a Busy Housing Market, which has already been released and is available. You can see it at trykcm.com/webinar to watch the replay. So with that, I thank you so much for your attention and welcome any questions you might have.
So we only have one question from Francisco. He said, if rates drop, do you expect inventory to drop lower, or do you think sellers will become more motivated to sell?
That is a great question. And it's one that I think is, and I know you are watching very carefully, we are too. With the Fed continuing, and we saw the rate increase this last week, continuing to push for lower inflation, mortgage rates might drop. And if anything, that would be an incredible reprieve for buyers, number one, from the pressure that they felt this last year. And I think, if anything, it will actually fuel more demand this year. We saw some signs of that back in January and even February. We saw sales of new homes tick up when rates came down. And that's what gives me the confidence to say, I know buyers are still in the market looking for their next home. At the same time, I think is also important to your question for a lot of sellers, right? A lot of homeowners are ready to move forward. Why? They may have changed jobs. They may be changing cities. They may have another child or two. They may look to retire. There are so many life circumstances which really drive a lot of transactions. For a lot of them, lower mortgage rates would be a welcome way to make the next transition to the new home much more palatable and affordable. So my expectation is, if we do see later this year rates drop, especially if they drop below that 6% threshold, we've seen them bounce around 6 to 7% for 8 months now. If they drop below the 6%, I think there will be a real signal for sellers that the market is much more friendly and approachable. And I expect to actually see more inventory in that case. And with that, I want to thank everyone for tuning in this morning, and keep an eye on the monthly market report later this week. And we'll see you on the deep dive next week.